Welcome to today's short webinar, which aims to give you some insight into the Charter Hall's newest fund, the Charter Hall Deep Value AREIT Partnership No. 3, or DVAP3 for short. And our guest speaker today is Group Managing Director and CEO of Charter Hall. Welcome, David.
Thank you.
So look, just jumping straight into it, can you give some history and maybe some analysis for the audience on why are we launching this new product and how did it come about?
Early 2020, I convinced a couple of our largest Aussie super funds that the reaction in the listed REIT sector to COVID was an overreaction and that there was deep value emerging in buying listed REITs. So in DVAP3, we launched a strategy to buy the REITs when they were heavily discounted. We waited some 15, 16 months, and at the end of 2021, I recommended to the investors that we sell all the REITs and give back the money to the investors. They made a very nice return, close to 30% profit margin. And then in the middle of 22, the market corrected. Then obviously rising interest rates, the listed market further corrected, and we saw an opportunity to go back and create a DVAP2 that those same investors partnered with Charter Hall Group. And for me, I wanted to offer to our high net worth investors in the direct side of the business that same opportunity. So I will be co-investing with other high net worth investors along with Charter Hall Group in a DVAP3 where I think the REIT sector is mispriced. And look, there's a whole range of reasons why the listed market gets mispriced. A big proportion of the institutional investors that invest in REITs are now general equities investors. They're not just property or REIT specialists. So when they get spooked, they move out of the real estate sector and go into industrials or consumer staples or some other GICS. And we see at the moment there's an opportunity to be buying real estate some of the REITs are trading up to 30% discounts to their underlying net tangible asset backing. We see an arbitrage. We think DVAP3 is going to give our investors the opportunity to buy good quality REITs cheaply, get a very nice dividend yield where, somewhere around 6% dividend yields are available for many of the REITs, and some of them quite a bit higher than that. We think that general equity money will flow back to the REIT sector, and there'll be an opportunity to either maintain a very nice yield on cost on your entry level and see the listed prices rise. There might be an opportunity for us to realise assets or REIT investments that get back to an intrinsic value or what we think is intrinsic value. And then the other thing that, is likely to happen in that, there may well be take privates and M&As activity that, will create a premium for individual stocks, but then that flows through to the other REITs in the sector. So it's a pretty simple philosophy. Charter Hall Maxim, is run by people who've been doing this for 20, 25, 30 years, have specialists that know all the management teams, that run all the different REITs, know all the portfolios, and can, with the benefit of the insights they get from the broader Charter Hall Group, which is at 80 billion, is by far the biggest property company in Australia, it allows them to be good stock pickers and hopefully deliver good returns for our DVAP3 investors.
So that discount to NTA, if I'm hearing you right, David, clearly an opportunity, not something that scares us at all. And
it's not just listed REITs should never be just priced on discounts or premiums to NTA. When all the REITs were trading at premiums, some of the REITs were trading at 60, 70% premiums to NTA. So you could still be buying a stock now that's depressed, that's trading NTA, but it's probably likely to trade at 30% premium to NTA in line with historic averages, depending on what the stock is. We're quite focused on stock picking and selecting companies that, yes, they might screen cheap, but are they going to deliver earnings growth and they're ultimately, give us fundamental growth. So those are the things that the Maxim or the Charter Hall Maxim team look at.
There's two fantastic portfolio managers there,
Yeah.
and Mark Ferguson and Pat Barrett, as you said, have been doing this for decades, who can then leverage off the experience and the insights from the rest of the $80 billion of assets.
Yeah, exactly.
Fantastic. Well, look, thank you, David. That's a terrific introduction on why and the history and what the genesis is of DVAP3. And you'll hear from me in follow-up videos with our portfolio managers and give you some more detail on the characteristics of the fund. So thank you, David. Appreciate your time. So thank you for taking the time to hear about our newest fund, DVAP3. If this fund is of interest or you'd like to know more, please do contact the team whose contact details are right now up on the screen. Thank you very much.